Hey there and Happy New Year! Per tradition, let's have a little convo about what I think is going to happen in the real estate world in 2025. Let's kind of recap where we are right now and how we got here. And then we'll launch into what's coming at us in 2025. So at this moment in time, at the end of 2024, our median sales price is $400,000. Our median list price is about $450,000. Number of transactions was 889, and we actually have 251 homes actively on the market right now. So how does that compare to where we've been? Well, I've been tracking this stuff for many years now, and if we go back to 2020, our median sales price, you guys, was $258,000. We also had 1,132 residential sales transactions in 2020. And the active inventory level in December of 2020, we only had 74 homes available for sale in Cedar City, Enoch, and the immediate outlying areas. So things have changed a little bit over the last 5 years. That's where we are. This was also the case nationally. So the National Association of Realtors came out with some information that shows in 2019, there were over 5 million homes sold nationally. The sales volume peaked in 2021 with over 6 million residential transactions. And in 2023 and 2024, we barely cracked 4 million homes sold. So you can see where the market was just kind of churning along at a normal pace, went bananas in 2020, 2021, 2022. The number of transactions really came down in 23 and 24. Now, we know that affordability is an issue and we need to figure that out. But did you know that all cash buyers hit an all-time high in 2024? So nationally, 26% of all buyers were all cash. And that kind of tracks here locally as well. So typically in the last few years, between like 20 and 25% of our buyers have been all cash buyers. On the other end of that spectrum is this data point that tells us first-time home buyers hit an all-time low in 2024. We do not love that data point, but that is the reality of where we are. So if we look back at 1981, 44% of all of the buyers in the market were first-time home buyers. In 2024, that percentage fell to just 24%. Now, I think this is really interesting. NAR also came out with who these first-time home buyers are. So if we're looking at the world of first-time home buyers, who are those folks? What is the makeup? What is the demographic of folks who are buying homes for the first time? So NAR compared 1985 to 2024. In 1985, 75% of first-time home buyers were married couples. In 2024, that percentage fell to 50%. In 1985, single women made up only 11% of first-time home buyers. In 2024, that percentage jumped to 24. 24% of our first-time home buyers were single women. I found that to be quite interesting. I also found this to be interesting. If we're looking at single men as a percentage of who our first-time home buyers were, in 1985, it was 9%. In 2024, it went to 11%. Men's stats haven't really come up a bunch since 1985. I'll let you do with that what you will. Also, this is really important to keep in mind as we're talking about 2025 predictions and what is going to happen. In our local market, 44% of our active housing inventory is new construction. Why does that matter? Because new home sales are different than existing home sales. So the builders have to take into consideration so many things: supply chain, labor cost, land costs, increases in the price of concrete, which just happened. And then they have to be able to make a profit that motivates them to continue to build new housing inventory, right? It's business, and it's typically on a bigger scale than just a regular homeowner selling their home when they're ready to move to a different property. Also, 35% of residential properties that were sold in our area in 2024 were single family attached. And when I say single family attached, I mean like a twin home or a townhome. It's a single family home, but there's a shared wall, which leaves 65% of our inventory as single family detached homes. So now that we kind of know what 2024 looked like, let's get into what I think is going to happen in 2025 and my 4 predictions to watch for. So the National Association of Realtors came out with their 2025 forecast. NAR predicted that the median home price would increase by about 2% in 2025 and also 2% again in 2026. Redfin, who actually has some really great stats, said their prediction is that median home prices will go up about 4%. There are other outlets that are saying maybe as much as 5%. I think that given the growth that we are experiencing, we are really going to be on the high side of those predictions. So I think probably 4 to 5% increase in home price is realistic. We're still seeing a very healthy demand for housing in this area. And while we have seen an increase in inventory, thankfully, it's still less than the demand. We're running at about a 3 to 4 month absorption rate, and the tipping point is really closer to about a 6-month absorption rate. So I do think that prices are going to continue to go up based on just that simple supply and demand curve. Another factor driving demand is simple demographics. Look at this chart of population by age. You can see boomers peaked higher, obviously, than Gen X. And the best generation, which is Gen X, obviously, is largely in a home and might be getting into the second home demographic. But you guys check out our millennials. This is a huge generation, and it spans from ages 26 to 44. So this is a really large group of folks that are out there forming households and wanting to get into their own home. And then look what's coming after them. Gen Z now has more of their generation over age 18 and are on the cusp of household formation. So just by the sheer number of folks that are aging into home ownership, household formation, demand is really going to continue to be a big driver in the world of real estate. Let's get into what everybody is talking about, mortgage interest rates. NAR says they think they'll get down to almost 6%. Redfin predicts that they'll stay near 7%. I've heard some experts predict a sub 6% mortgage interest rate. I think that's a little optimistic. So let's talk about what is driving these mortgage interest rates. So first of all, NAR predicts that the Fed is going to cut the short-term rate, the bank rate, 4 to 6 times in 2025. I've also heard experts predict that it might only happen twice, 2 short-term rate cuts. Let me tell you why I don't think the Fed rate is going to have as big an impact on our mortgage interest rates as some people think. I want to give credit to an analyst named Dave Meyer, who has a great podcast if you really like to nerd out on this stuff. So I'm going to kind of summarize what Dave Meyer has talked about, and it's on Bigger Pockets. If you haven't listened to the Bigger Pockets podcast, it's really good. It all comes down to bond yields. And I know this might be really boring if you've heard me talk about this, but just give me 1 minute because this is really important to understand why mortgage interest rates are doing what they're doing. We've talked about this before. Mortgage interest rates are not controlled by the Fed. They are really influenced by bond investors. And bond investors don't really think like real estate investors or like stock investors. They are really concerned with things like inflation and recession risk. So typically when inflation is on their mind, if they're worried about inflation, that means bond yields are going to go up, and that pushes those mortgage rates up. When instead of inflation, investors are worried about a recession, they usually pour money into bonds. That pushes yields down and takes mortgage interest rates down with them. And so this is the reason I'm saying that I think bond yields are going to stay up. The market is saying that bond investors are really more afraid of inflation than they are a recession. The national economy, by most traditional metrics, has looked okay over the last year. Incoming President Trump has promised to implement a lot of stimulative policies, which are likely to boost the economy further. And when an economy gets boosted too much, there can be a fear of inflation. It's likely what we're seeing right now with mortgage interest rates staying kind of high. That's also why mortgage rates, even though the Fed cut the rate in September, have increased. Indications are right now that we will see a strong economy in 2025, and that means mortgage rates will likely stay kind of on that higher side. I do think that we are in this sort of hopefully long downward trend for mortgage rates. And when I say a longer downward trend, I think it's going to take more than a year for them to sort of settle out to what is the new normal. I'm hopeful that this new normal will be somewhere in that 5.5-ish% range. That's close to what the long-term average has been. I don't see that happening in 2025 right now. I think it's probably more likely to come towards the end of 2025 going into 2026, and it might even take us through 2026 to get there. Essentially, when it comes to mortgage interest rates, I think we're going to be in that 6.5-ish kind of range, one side or the other. I am rooting for lower, but that's kind of where I see things sticking about right now. I want to talk about sales volume, or the number of homes that are sold. So the National Association of Realtors has predicted that the existing home market will increase by 7 to 12% in 2025, and then an additional 7 to 12% over that in 2026. Redfin predicts only a 4% increase in volume. If you look at the percentage of change year over year, nationally, we've been down since July of 2021. And in our local market, our sales volume has been down since about the end of 22. And it looks like both nationally and here locally, that trend has reversed. And the number of sales transactions is increasing. So I think a lot of the volume is going to be driven by mortgage interest rates that we just talked about. If rates stay higher, I think that we will see maybe a 6 to 8% increase in sales transaction volume, number of homes sold. If mortgage rates fall below 6.5 or even get closer to 6%, I think that this market will absolutely go bananas, and I think we could see an increase in sales transaction volume of 20% or possibly more. I want to take a minute to talk about rents, because rents have been doing some interesting things in 2024. So if you are a current renter, or you are a current investor, or you are thinking about becoming an investor in real estate, this is for you. Let's dive into kind of what has been happening in our local market in the last few years. Several years ago, we were really in a crunch in our rental market. We just had not even close to the number of available units to satisfy the demand of people who needed to be in a rental. So what happened? Well, a bunch of folks saw that demand and started building large multi-family properties, big apartment buildings. Now, as you know, it takes longer to go from the permit to being able to rent out your property than on a multifamily home than it does on a regular single family home. So it's taken a couple of years from the time these builders got their permit and all of these units hit the market. But in the last several years, we have literally added hundreds and hundreds of doors to our local rental inventory. That has had the effect of pushing rents down a little bit. So if you are a renter, enjoy it while it lasts. If you are an investor, that is something important to build into your pro forma when you're analyzing a property. Now, I do believe that this is just a temporary situation, because all of those rental units, they kind of hit the market at the same time. And so it's taken a while for them to get absorbed. But as our population continues to grow, and it is, rents are going to start going up again, which is one of the many reasons that I encourage renters to become homeowners as early as you possibly can. Let's talk. The National Association of Realtors came out with this information that talks about what the median net worth is between renters and homeowners. And you can see that in 2024, the median net worth of a renter, of a tenant, was $10,000. That actually went down from 2022 when it was $10,400. You can see that the median net worth of homeowners has continued to go up. So in 2019, it was $295,500. In 2022, it was $396,200. And in 2024, $415,000. Home ownership really is the key that unlocks the ability to start building real wealth. So take a look at that chart and let's talk. So overall, I think there will be some great opportunities in 2025. We'll still have some affordability challenges, but when you live in such a great place as Cedar City and the surrounding areas, and you see all the economic growth that is happening, one can't help but be optimistic. Happy New Year to you and yours. May it be prosperous, healthy, happy, and the best year ever. We'll see you soon.